Mr. Mark Selby, how are we, sir?
Very good, Mr. Matthew Gordon.
I am glad to hear it. Glad to hear it. We had a good session last week in London. And how do you think the conference went, actually? Because that's what you were there for.
Oh yeah, no, it was. It was excellently timed as nickel crossed through $20,000 a ton. And the conference-wise, I think a couple things. One, the fireworks we've been seeing in the copper market, and then the broad move across the base metals in general, and then the BHP Anglo takeover news. We probably had our best one-to-one conference, I would say, since Canada Nickel, and even going back, into RNC, RNC minerals days. We had a handful of generalists come out. So, again, that's the sign, and that's what's really going to, get us into a bull market, in mining, which we have not had for quite a while here. And so cautiously optimistic that, the BHP Anglo deal, once one deal happens, you're going to have a whole plethora of M&A activity. And so, hopefully that, again, pulls more interest in. And the fact that we've seen a bunch of stocks move, you're going to see funds have a good March quarter. They still have another great June quarter. And, hopefully start to see some net inflows into these funds, which again, I think are setting the stage for a pretty interesting fall.
It's interesting. I was talking to a couple of guys yesterday, and they were in London for a different conference, but they were talking to, it was a precious metal space, precious metal funds, not too many of them in London. And they're still seeing net outflows, despite the kind of high gold price environment. So people just need a sustained period of positive movement, I think, across the board before we kind of sort of see the equity starting to benefit from it. It feels like, but in the meantime, I'll take the high price commodity metals environment. Now, talking of which, we saw it break through 20,000 last week. Where are we this week?
Yeah, so in between where, when we talked a week ago and today, nickel kept the momentum going, got almost all the way up to $22,000 a ton. And then has now fallen back to about the same level that we talked about a week ago. Again, still tremendous news. I had been calling for $20,000 a ton by the end of the year, and so the fact that we've hit it already is great news. And again, underscores our thesis that the nickel market is far tighter than a bunch of the analysts have been talking about. I think from this point, I think we consolidate in this $20,000 ton range. But again, I think once we head to the fall, if Indonesian supply, which again, the Indonesian government, we talked about, seems to be, keeping their hand on the taps in terms of how much ore is coming out, and demand has been looking good. And we've set inventories tick up a little bit this past week, but, nothing excessive. I think, we're sitting, we're sitting at, in terms of just days of inventory on the LME. So, no massive overhang to really worry about.
And then what do you expect to see with price? Because I think people will react if it kind of rips back down again, as it starts to become or look a little bit erratic. Expectations over how price will kind of pan out for the rest of the year. What are you feeling?
Yeah, no, I think, as I said, 4 months ago, I thought, getting to 20K would be a good move with the risk of it getting higher. I think, from here, I think we consolidate in this 20,000 range. I mean, we've moved 30% in just over a couple months. And so we need to consolidate those gains. But at this point in time, given we're seeing, I think, another leg higher in the fall, maybe up towards the $22,000 ton level, is definitely possible. And again, given the way we think, demand and supply is likely going to unfold as the year goes on.
Before we kind of get into company news, I think I just want to sort of talk around, I guess, perception of, something like, say, some of the funds, some of the OEMs that you guys are talking to in the nickel space. We're seeing the same kind of conversations happening in copper and obviously precious metals, both gold and silver, kind of ripping it's like $32 yet. I think they've both come off a little bit today, but still $23.50 and $31 is good news. The sentiment in the marketplace is good. It seems to be off the back of a sort of something dawning realization that when you CEOs have for the last sort of 20 years told me that supply and demand fundamentals are not there and we're going to run out of this stuff, it's never felt real. It's felt like a marketing conversation. Now it kind of feels a little bit real because we're seeing companies well, explorers struggling to actually get the permissions that they need to actually do the drilling. We're seeing, NGOs and social license, come heavily into First Nations type activity as well. We're seeing difficulty of getting money to fund exploration. We're seeing difficulty of getting money to fund development. The costs seem to have been blown out of the water in terms of the realization that it's a little bit more expensive now than it ever was to get this stuff out of the ground. And heaven forbid you actually get to a point where you can actually start to build this thing. You've got to find companies who are experienced in doing that because they're thin on the ground. And even when you're in production, there's still barriers that can be put up. So not a lot of people get over the finishing line. And I think the market's sensing that, right?
Yeah, there's been a bunch of long-term trends here that are all converging at once. And I think, some of the things we're seeing right now, are some very clear market signals that these long-term trends have come to roost. I think, first off, in terms of, Western world, mine supply, to a large extent, since China showed up in the 1990s, through till a few years ago, we were like the really, lazy person lying in bed all day. It's like, I can't be bothered to even get up and make dinner, but it's okay because anytime I want food, some person knocks at the door and gives me whatever food I need and as much as I want, and actually, it's cheaper than it was the week before, and that was really what Chinese mineral supply was for several decades. And so, we've kind of fallen out of the mine building business, in the West. Number one. I think number two, this whole BHP Anglo takeover, it's like, again, all of the big, what we just came through, I think people haven't realized is probably, for the first time, like literally in 5,000 years of people tossing rocks into fire and making metal, is we saw prices go up, in the prior cycle, and really didn't see a big the typical supply response they would normally see, because the big mining companies controlled most of the best assets. They had done such a crappy job a decade earlier building supply that their shareholders said, don't do that. And they didn't do that. And we haven't seen that supply response. So, as a result, we have, and we touched on it last week, is, copper hit $5 US a pound, but normally, when we hit those kind of highs, the commodity currencies are at cyclical highs as opposed to right now where they're at cyclical lows. So, in Aussie dollar terms, copper price is $7.50 a pound. In Canadian dollar terms, it's, $6.70, $6.80 a pound, which is, again, 30 or 40% beyond where the prior high was. And there were some comments today, the Aussie resources minister responding, to BHP saying, please, we're a charity case, can you give us some cuts so we can save our nickel business? They kind of slapped them on the wrist and said, well, part of your cost issue is the fact you haven't really invested much in this nickel business over the last decade. And again, one of the other key assets in Western Australia was a alumina refinery that's been there for several decades, and again got shut down, because I don't think it's been invested in to keep pace with the kind of scale. Again, Western Australia has some serious cost structure issues, but there's stuff that's not, the government's not going to fix tomorrow. So, I think the, commodity currency prices are telling you, that's there. The big mining companies are saying, oh, I'd rather buy than, really build at this point in time. And somebody's got to make these critical minerals other than China, because we've all decided, we don't like depending on supply from China anymore. So, I think, we're going to see a pretty interesting few years here, maybe that we haven't seen for a couple decades.
Yeah, no, that's actually, well said. I'm still smiling at the thought of a company going to government saying, would you mind bailing us out? Is that within danger of getting into politics here? That seems to be the mentality of most people, certainly in the UK, which is, I'm entitled, please give me some money because I can't be bothered doing anything myself. Yeah, so I don't feel that much sympathy for BHP either. It's, we're seeing it here with some of the water utility companies where they've had years of private equity companies sucking money out, underinvestment, and now, guess what? Joe Public gets to bail them out with 70% increases to their water prices. So there we go. Right, but back to nickel.
Yes.
To nickel. Case, I'd love to do. The was it the guys from the Muppets, two old men grumpy about everything. But it seems to be every conversation I have with a CEO at the moment is that we've reached that age where we're looking around where it wasn't like this in my day. That's where we are. Maybe we should. Let's think about it, guys. Get on it. Right. But so back to the kind of nickel prices component of it in terms of, and I know I touched on briefly, but in China, how did that translate in China with nickel prices rising?
Yeah. So generally, whenever you see that kind of sharp move that we've seen the last few weeks, it takes a while for the actual consumers to decide whether or not they want to, start to pay those prices and take a look around. So the big move up in exchange prices, haven't been followed through yet by prices of the underlying products in the battery market and the stainless steel market. So it'll take a few. We've come down a little bit, so we'll see whether the prices come up. And again, that'll be sort of a good indicator in terms of where those fundamental supply and demand. So to something we'll keep an eye on for the next few weeks. One good thing was Nickel Study Group bulletin came out again. That's the UN designated body that keeps track of things, and they came out with their March. They're a couple months behind always, so they just had their March numbers come out this past week. And for the only second time in 2 years, we've had a deficit month. So demand's up 9%, and year to date supply is only up 7%. So again, the thesis that the market as a whole is not nearly as sloppy as a lot of analysts would have you believe. We're basically running right now. The first quarter is running at about an annualized 80,000 ton surplus, which is about just over 2% of the market. And again, we're just starting the year, right, where we're getting into this restocking on the battery side. So expect to see the demand numbers creep up as the year goes on, and then we'll see how much supply ends up showing up in the end.
Right. Okay. And I think I know we talked about this last week, but in terms of I can't remember if you talked about it. So I don't think you have. I would remember Macron's name, but New Caledonia we're still rising, or have things calmed down?
No, things are still unsettled. And again, for nickel, New Caledonia is the third largest mined ore producer. Most of it stays in New Caledonia right now, but it does provide some amount of exports. And the French have managed to completely detonate the underlying issues with the local community, and so there's been unrest there. I think the mines have been basically shut down or running at very low levels, and so he's flying in to try and calm things down. And again, that's just going to help tighten up what was already a market that was looking a lot tighter than many had expected. So we'll keep an eye on it. I mean, New Cal politics are very, very tough. It's an island where the nickel industry poured in over $20 billion, and that is between Goro and Koniambo, and has shown a big zero for it. And again, the local political structures, a lot of the underlying community issues are a big reason that 20 billion is turned into a zero. So
right, okay, so energy costs, labor costs a lot higher than Indonesia, so it's problematic. And I'm going to put a link here from one of our listeners who I think emails you and me. I'm going to massacre his name, Kuan Hertz. He's a regular contributor in terms of content information. I'll put a link there to something he sent through for us. Right. Well, let's get on to company news, because that's always the fun bit. So we're going to talk about
3 high-grade intervals. It's like,
3 high-grade intervals. Yeah. We like high-grade. We like all nickel. Go on. Who are we going to start with?
Yeah. So Talon, what they're calling the CGO East Waterfall. Again, with nickel deposits, to make something that's high-grade, you need basically, some sort of trap where that nickel material can get concentrated, and again, the heavier, denser nickel sulfides, massive sulfides, condense out to the bottom. So you're always, when you're drilling for high grades, you got to try and see where you can find these traps. And so, yeah, they have one structure on one side of the resource that sort of plunges down, and it seemed to have filled up with higher grade sulfides, and they now seem to find another structure at the other end of it. So, anytime you can drill $1,000 a ton value rock, it's a good day. And so kudos to them, just under 5 meters at just almost 5% nickel, 4% copper, and more than half an ounce of PGMs there. So and again, that was adjacent to a bigger disseminated interval of about 79 meters. So, the thing here now is to try and see, how extensive and how thick that structure is. But, that's a great start, and, good to see, those kinds of grades showing up, here in North America.
Absolutely. Now, we've got two more. Who's next?
Yeah, so the next one, I might be calling it a Garibaldi here. So
you better explain what that means.
Yeah, so Garibaldi was a company that had some. Again, when I talk about, it's good to get a high grade interval, but it's even more challenging to put together something that ends up into a high grade resource. So Garibaldi was a big hype about 5 years ago. In fact, Derek Sprott, put some money in the nickel business. The stock popped up to about $250 million. And, when you started to look at the drilling, and I think it's probably still posted, there's a website called The Angry Geologist. I don't know if they're continuing to update their stuff, but they ended up doing basically modeling out in detail, which I had suspected is they're basically drilling the same little lens from about 4 different directions. And when you actually modeled what the size of the lens is, they probably extracted about 8% of the nickel that was there via the diamond drilling. That worked. So yes, so
expensive drilling.
If you guys aren't, if this isn't the case, please put out some stuff that really shows that you're really extending this. But they just put out another hole. Again, 20 meters, 2.8% copper, 2% nickel. But it looks like everything's in the same kind of 50 by 50 meter envelope, and so we need to start extending it, and or looking for analogs along strike. Again, we need more nickel, but it's not helpful if it's you're just mining by the diamond drill, which is
I think that someone said basically it's like drilling into like a pin cushion. You're going after the same stuff. You're not actually learning anything. You're not stepping out. You're not showing scale. Yeah, we've seen companies do this before, and obviously, I want small companies they've got to try and do things the right way as opposed to for the headlines, because they've got other issues such as market cap, lack of ability to raise capital, or indeed are cash strapped in some way. It may seem like the solution, but ultimately it is going to lead to I guess some difficult conversations down the line. And then we better skip on to Power Nickel, one of our favorite guys.
Harry Lynch is team doing well. So, another good hole. It's now the structure that they're drilling is more copper PGM than nickel. It's still got a little bit of nickel in there, but again, another gangbuster, 5% copper, over half an ounce of PGMs, over 15 meters. So again, they've done a decent job sort of delineating lens here. So what they need to do now is just to see sort of, how extensive, along strike or at depth this thing is going to turn out, and whether there's, again, analogs along the same set of structures that they can start to test. So I think this is the end. These are the end of the results from their most recent campaign, and then they're gearing up again to go back in the field. I'm not sure exactly when, but it'll be good to see how the next set of things progress. So again, nice to see a good nice greenfields discovery in Canada. So we'll definitely be keeping an eye on that one as we move forward.
Good. And obviously, we caught up last week about Canada nickel. It's a big year for you guys, and even bigger one next year. So things still. Well, you're going up to camp next week, aren't you?
Going off to?
Are you going up to Timmins?
Next week is actually Sudbury. So
Sudbury. Okay.
There's a battery EV conference that most of the Canadian, Central Canada players are going to be there. So it looks like it's a great lineup.
You're right.
And then the week after that, I'm up in Timmins for the Timmins Mining Expo, which is
there we go,
basically a mini version of PDAC. But again. Yeah. Given that, it's a great example of the scale of what happens in Timmins. You could literally, outfit and whatever you need to build and operate a mine, at that mining expo. There's probably 5,000 or 6,000 people were there. So no, it's a
You're right.
Great.
I'd done that thing which I'm very good at doing, is not knowing what day of the week it was. I literally thought next week was June. It's not. I'm not wishing my life away. Certainly not at the moment. It's too much fun. Metal prices, going on a good old gallop. Mark, thanks very much for checking in with us. Hopefully we'll try and catch up with you from Sudbury next week if we can. If not, see you soon.
Sounds good.